This is your LMAX exchange technical update for Wednesday, August 3rd, 2016. Euro dollar. So the euro continues to extend gains since breaking above some critical resistance on a short-term basis in the 112 area, with the market trading up on Tuesday into the 100-day moving average. At this point, though, there is scope for additional upside towards 114 given this latest break, although overall the broader downtrend does remain intact, and we could see another topside failure somewhere ahead of 114 in favor of the next major downside extension. But for now, the market is flirting with the 100-day moving average, and it will be interesting to see if we close above or below in Wednesday trade. Sterling dollar. So cable continues now to extend its correction out from those recent plus 30-year lows, and there is room for additional corrective upside in this market, potentially back towards some critical previous support now turn resistance in the 138 area. Overall, though, the downtrend remains firmly intact, and a lower top is sought out somewhere ahead of the next major downside extension towards fresh plus 30-year lows down below the 128 area current lows and towards the next key psychological barriers at 125. Dollar yen. So dollar yen continues with its collapse following that recent rally that we saw up to 107.50. The market is now looking to retest the recent yearly and multi-month lows down around 98.99, with a break potentially to expose the next major downside extension towards the 90 area. At this point, any rallies are classified as corrective and should be very well capped towards the 104 area, while ultimately only back above 107.50 would compromise this current intense downtrend in dollar yen. Euro Swiss. Euro Swiss continues to chop around with the market over the past several days, confined to a 108 to 110 area loosely, and it's going to require a break on one side or the other for clearer directional insight. Aussie dollar. So Aussie continues to be very well supported on dips, though overall, if we look back to the previous months, it looks like the market is trying to top out off that 2016 high at 78.35. So there is risk for a lower top now at 76.77 despite this latest rally, and while the market holds below 76.77 on a daily close basis, look for another topside failure ahead of a fresh downside extension. For now, key short-term support comes in by that low that we saw on the 27th of July at 74.21. Dollar CAD. So dollar CAD should be very well supported on any dips going forward, with the market in the process of basing out after triggering this base on a break above 31.89 and opening the door for an eventual upside extension into the 135 to 140 area. As such, any setback should be very well supported above the previous higher low, which came in around 128.60, with only a break back below 128.60 to delay this highly constructive outlook. Kiwi dollar. So Kiwi has rallied up in recent trades since basing out at 69.52, but any rallies in this market continue to be very well capped on a longer term basis, and we would expect to see the market stall out again into the 73 area ahead of the next major downside extension. At this point, only a break and close back above the 2016 high at 73.25 would compromise this more bearish outlook. SPX 500. So the S&P 500 finally showed signs of rolling over in Tuesday trade after trading up to a fresh record high on Monday. At this point, there's risk for deeper setbacks following this latest breakdown below a series of previous range lows, and the market could see an acceleration all the way back down towards 2100 over the coming sessions. But if we do see a break back above 2183, which is the current record high for Monday, this could set the stage for a move up towards next key psychological barriers at 2200. Again, the reversal day and bearish close on Tuesday does set up the possibility for a significant top here, opening the door for an acceleration of declines. But again, we would need to see the market follow through in Wednesday trade, and that would open the door for an acceleration towards 2100 initially. Gold. So gold remains very well supported on dips, with the structure here highly constructive. The market was most recently supported down towards 1300 and is looking to confirm a higher low ahead of the next upside extension beyond the recent 2000 peak at 1375 and towards 1400 further up and then beyond. At this point, only back below 1300 would compromise the highly constructive outlook for gold.